Hi there, welcome to Markets Tomorrow right here on ET9, the Mumbai News Centre. I'm Tanveer Gill. Let's start off with the top headlines that summarize today's market session. Range-bound session on Dalal Street ends with marginal gains. Banks were the biggest laggards in trade today. However, an up move in auto stocks assured a higher close for the indices. Yes Bank delivered strong Q3 earnings. Net interest income was above estimates, while PAT pretty much met expectations. Asset quality was fairly controlled. Lending book continued to grow. Net interest margin also grew at a premium to the industry average. Axis Bank Q3 numbers disappointed the street. Net interest margins came in slightly lower quarter on quarter. Provisions were steady, but gross NPAs rose to 5.22% versus 4.17% on a quarter on quarter basis. However, the watch list reduced considerably from what was expected. In fact, the overall percentage fall there in the watch list was about 20% quarter on quarter, which the market would see as a positive sign. Meanwhile, Federal Bank also reported a set of numbers that were in line with expectations. Third quarter profits meet estimates, while asset quality remained stable. Net interest income came in above estimates, but the stock remained volatile. Ujjivan took it on the chin after earnings disappointed the street. Profits actually fell considerably in the third quarter, while provisions came in sharply higher on a quarter-on-quarter basis. There was a tear-away rally in Monetary Ispat. The report suggested Sajjan Jindal's JSW Steel, Sudhir Maheshwari-led Synergy Capital and global PE giant Blackstone are in talks with lenders for a controlling stake in the troubled steel firm. Proposals likely to be submitted by early February. And then Uttam Galva was on fire in the session following reports that Aeon Capital may be planning to throw a lifeline at the troubled steel maker. Restructuring package likely to entail fresh capital infusion to 500 to about 1,000 crores for working capital requirements and growth. Aeon is set to emerge as the largest controlling shareholder in the firm post the transaction. We'll make sense of the markets as always with voices lined up on the show. Nilesh Shah of Envision Capital joins in with his perspective. So does Rajat Sharma of Sana Securities. And Sameet Jawan will take us through the technicals. Good evening to both of you, Sameet as well as Rajat. Thanks very much for taking out the time to be with us this evening. Rajat, I'll start off with you. First, broad view on the market. Very quickly, you expect the market to head to 8,500 before the budget, and then once the event risk is out of the way, resume its uptrend?
Yeah, good evening, Tanveer. No, absolutely. I do expect that markets should do well post-budget. Having said that, these are not the markets where you would really be looking out for levels from my perspective. What I'm looking to do is looking to buy stocks in sectors which I believe could benefit a lot post the budget. And clearly there are sectors which, irrespective of what happens in the budget, could either underperform or basically go nowhere. And we were talking, I was listening to you talking about Yes Bank and Axis Bank, their results. I have maintained that going forward, financial services as a whole for the next couple of quarters will at best go nowhere. So that's like one sector best avoided. But based on the budgets and based where markets are, infrastructure and power and metals, these are some of the things. In fact, consumption itself, these are some of the themes where we're looking to buy, and we've moved I would say substantial money from financial services towards these sectors.
Sameet, your own sense of the market levels from here?
Good evening. In last 4 to 5 days, we have seen a consolidation happening in the market. 8460 has been acting as a very strong resistance. Technically speaking, yes, this is an important level to watch out for. On 11th November, we saw downside gap area. So that gap area is around 8460, 8510. So index has been struggling around those levels. But we would believe that this is just a consolidation phase, and Nifty has already given a sharp recovery of nearly 450 points in last 3 weeks. So after giving such a strong recovery, it was quite evident for market to consolidate a bit or having undergoing some kind of profit booking around those important levels. So we would interpret this as a consolidation phase or a breather. We expect Nifty to head much higher probably for next few weeks. We expect Nifty to surpass 8500, and our immediate target would be around 8650, 8720. So any dip from current level 8300, 8350 would be seen as a very good buying opportunity. So we would continue with our optimistic stance. As far as next 3 to 4 days are concerned, we believe that Nifty is likely to consolidate in a narrow range, wherein 8460 would be a resistance, 8370, 8320 would be a support level, and we expect stock specific action to continue in the market.
Okay, banks, banks, banks all the way. That's what today's session was all about. Federal Bank, Axis Bank, Yes Bank. Rajat, come in, take your pick. I think you already mentioned about it. But how would you dissect the earnings, and more importantly, what's your pecking order within the large cap private banking space now?
Yeah, so Tanvir, I think last time I was in a show, I mentioned that we're looking to avoid banking as a space overall. The only exception I made to that was IDFC Bank, which I've bought for very fundamental reasons right now. So we've allocated some money to IDFC Bank, but besides that, we've substantially reduced our holdings in private sector banks and both NBFCs. I was going through Axis numbers right now. If you see, gross NPAs have gone up to 20,000 crore from about 16,000 crore, and if you look at the segmental revenue, it's the corporate banking which has reported from 1600 crore revenue to about 1700 crore negative. So obviously there have been some substantial write downs in the corporate banking side. Having said that, one good thing which stands out is that you have to commend Axis Bank for its honesty, because this is something they had said around 3 quarters or 4 quarters back, that about 60% of their watch list loans will turn bad in the next 8 quarters. I think they said at that time around 4 or 5 quarters back, and we've seen that happen now. If you were to look at their guidance with watch list and what they're doing, if that has improved and you believe them to be honest, which by the way I think nobody can know what's happening inside, and this is not even a regulatory figure, this is what the bank says is watch listed. Going by that, you could only hope that things will improve going forward. But the reason for not buying or not allocating more money to private banking or public banking is the huge amount of deposit that we've seen in demonetization. I don't think the loan offtake is going to happen very quickly, and NPAs remain NPAs. I mean, this money coming in will not change any of that. So hard to say what's going to happen. We'll need more clarity in the next 2-3 quarters maybe. It's not something I can say I'll look at the numbers and make a prediction. Numbers are in front of you. What happens going forward, let's see. So right now, avoiding banking as a sector.
Okay. Samit, very quickly, Axis Bank, Federal Bank, Yes Bank, which is the most favored chart right now for you?
See, Tanvir, as a disclosure, last Friday when Axis Bank gave a good up move from the levels of 445, 450, we had recommended to our clients, and our near-term target was around 490. Yesterday we saw the stock hitting a high of 490. But if we look at the broader degree chart, the stock has already formed a strong base around 430, and from there it has given a decent recovery. So any dip now towards 465, 460 would be seen as a very good buying opportunity. The stock, as I said, has already formed a strong base, and we expect the stock to outperform probably in next 1.5 months time. We expect this stock to surpass 500 quite soon. So we would use any dip to get into this stock with a near to medium term perspective, and for next at least 1.5 months we would project targets of say 525, 530 for Axis Bank.
Okay, gentlemen, stay on with us. I think we need to just quickly head into a break. As we do so, hear out Malaysia of Envision outline his market philosophy and where he's laying his bets. When we come back, we'll help our viewers approach trade tomorrow.
I think the next couple of quarters will be determined by both the global and the local factors. Clearly, the new presidency in the US is going to be very keenly watched. Back home, clearly we are going to see in the very short term the negative side effects, those short term of demonetization, a bit of uncertainty in terms of how the GST will get rolled out. I think, and of course the budget related announcements, the trend of financialization of Indian savings is really playing out, and that's providing a lot of support to the market. We still continue to like our set of companies in sectors like consumer staples, consumer discretionary, hospitality, financials, real estate development, pharmaceuticals, technology services, specialized engineering. I think there's one sector which probably we have not been there in a significant manner, but I think we are kind of really actively scouting for opportunities. There is basically the cement sector.
Welcome back. You're still watching Markets More right here on ET Now, and we're still in conversation with Rajesh Sharma as well as Sameet Chauhan about the fundamental and technical approach to the market for tomorrow. I just want a quick word in on some of the earnings that have come out. So we've spoken about banks, Rajat, but very quickly I also want to touch upon NBFCs because there's Indiabulls Housing, which is going to be coming out with numbers, but we've seen how Dewan Housing, LIC Housing, and some of the other housing finance companies have actually delivered a fairly stable quarter at a time when we thought demonetization would derail the story. Are you bullish?
No, absolutely, Tanveer. That, in fact, HFCs remain one of my top picks within financial services. Just now I said we've reduced exposure to banks and NBFCs. I have always maintained housing finance companies actually have benefited the most from demonetization. Because, what this will result in is house prices coming down and houses coming in the reach of, a lot of the middle class Indians, and that's the core market for these housing finance companies. In fact, the other company that reported numbers was Canfin Homes, which is, one of my favorites right now. What will happen is also the fact that, the interest rates are coming down constantly. So with interest rates coming down, house prices falling, a lot of these homes will come into the reach of course the margins will reduce, but the size of the market will increase. And you can sense that by the number of new guys coming into the space, housing finance. So definitely, LIC Housing, Canfin Homes, buy them, hold on to these stocks in your portfolio for a long time. These could be, those next multi-baggers that you're looking for the next 5, 7, 8 years.
Let me just go across to Tanya, who joins us with what to expect from Indiabulls Housing Finance as well. Tanya, tell all.
We were expecting a pretty steady to inline set of numbers for Indiabulls Housing Finance for Q3. The net interest income is expected to come in at about 1,033 crores, up about 21.6% on a year-on-year basis. Profits, on the other hand, are also seen at a similarly higher, about 21.7%, coming in at about 733 crores. Now, if you look at the NIMs, they're expected to remain pretty stable year-on-year. However, going forward, we expect the NIMs to expand significantly, given the fact that the benefits of the lower cost of borrowings should start flowing into the bottom line for this company. Asset quality as well is expected to be pretty stable on a year-on-year basis, on a quarter-on-quarter basis as well, actually. If we look at the AUM growth, we're expecting it to come in somewhere close to about 27 to 30% higher on a year-on-year basis, and the factors to watch for this particular company would be asset quality trends in the corporate segment as well as the LAP book. Remember, demonetization had a major impact on most of the company LAP books, and that is one thing that we definitely have to get an update from the management from. AUM growth trend as well as the growth guidance post the demonetization will also be something that will be key to watch. And lastly, look out for the company's outlook on borrowing costs, securitization as well as demand in its core mortgage book. Now remember, this is one of the most widely tracked results in terms of housing finance companies, and the company had also cut its housing loan rates. So it's going to be interesting to see what comes out tomorrow.
Thanks very much for that, Tanya. Sameet, same question to you before we wrap up. Some of the housing finance companies, any one that you fancy?
Yeah, obviously, the choice has to be DHFL. Last week we saw confirmation of near-term trend reversal after the stock surpassing its near-term hurdle of 250, 255 with substantial rising volume. Since then, we have already seen nearly 10% uptick in this stock. Since last 3 days, we have witnessed a modest profit booking, but we believe that this would just be a breather before the next upward leg of the rally. We would expect the stock to first correct toward 270, 268, which could be seen as a very strong support in the near term, and we would interpret this as a very good buying opportunity. Looking at the weekly and monthly chart, this stock has 300 quite soon.
Okay, help our viewers with your strategy, Samit, very quickly to approach trade tomorrow.
Yeah, we expect stock-specific action to continue in the market, and there are a lot of stocks that have already given a good up move with the rising volumes. Our first stock would be on TVS Motors, which has confirmed a breakout. We would maintain our optimistic stance. Our target would be around 400, stop loss 385. Our second buy would be on Avan Offshore, which has already confirmed a good price volume breakout today itself. Thus, we maintain our target of 276, and stop loss can be fixed at 244.
Okay, Rajat, your top 3 investment ideas very quickly because we're running out of time.
Sure. So Tanveer, this week we had invested some money into Larsen & Toubro. Again, this is not really a budget pick, so it's tomorrow and beyond going forward. If you were to believe that infrastructure will revive, this is the most predictable stock. The order book has grown 8% in the last 6 years. The stock price on a CAGR has grown 8%. So if you believe infrastructure will revive, this is definitely a stock to add. So Larsen & Toubro would be one. The other, as I said, consumption. Why we've invested in Kansai and Nerolac. Valuation wise, it's looking the cheapest amongst its peers, including Berger and Asian Paints. So that's the other stock. So these are the 2 stocks we've just already made investments in the last 1 week.
Great, thanks very much, gentlemen, both of you, for joining us and giving us your perspective on the market, helping our viewers to approach trade tomorrow. We'll take a very short break right now, but as always, we'll catch you with the markets tomorrow morning at 8 a.m.